Hi friends, this is Ravi Kanth Miriyala. Right, my classes on CA final paper number 1 financial reporting are available on an academy platform. Yeah, these are recorded as well as live, and it is 100% comprehensive and 100% English batch, wherein we discussed each and every concept of Ind AS, which will be useful to the students even after qualification for practice purpose. Also, this will be useful. Yeah, please, inform your friends about this information. And on an academy platform, comprehensive batch on GFRS also is done. 23 classes, 69 hours, entire ICA material with PY examination questions and mock test papers also are covered in this discussion. It will be very much useful for CA final GFR, that is paper number 6E. Next, for my books, that is on Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikantmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM.
These charts are from my quick revision fast track charts book on financial reporting. This book is available in the market and even in my website. Yeah, let's look at Ind AS 23, which is borrowing costs. Yeah, borrowing costs which are directly attributable to a borrowing. If I had not borrowed, I would have not incurred. Yeah, those costs are supposed to be borrowing cost. How to account for whether it should be capitalized or should be charged to P&L is dealt by the standard. Yeah, when this borrowing cost include the effective rate of interest, that is which you have learned it under Ind AS 109, and interest with respect to leases which are as per Ind AS 116. In case of finance lease, in case of whether you're a lessee or lessor, as per that it will come in. And the next point, which is important, foreign exchange difference arising from foreign currency borrowing, to the extent it is regarded as borrowing cost, means out of foreign exchange loss, what some extent compared to if I had taken it in Indian borrowing, yeah, what extent will be treated as borrowing cost, right? We'll discuss about it towards the end. Yeah, this borrowing cost must be incurred. If it is imputed or deemed cost, no, it's not going to be considered by the standard. And it is not applicable obviously to the if it is not a qualifying asset, then it is not applicable. Yeah, what about this borrowing costs? These borrowing costs which are directly attributable to acquisition, construction or production of a qualifying asset, then yes, you should capitalize it. If the asset is not a qualifying asset, then you should be charging it to profit and loss as financing cost. What is a qualifying asset? Qualifying asset is an asset which necessarily takes a substantial period of time to make it ready for its intended use or sale. When they say use, that can be a property, plant and equipment, that can be intangible asset, that can be investment property, right? And if it is meant for it is intended sale, that means an inventory. That means an inventory, if an inventory is a qualifying asset, then interest is supposed to be capitalized. Yeah, what is a substantial period of time? Generally, there is no definition given in the standard. Generally, 12 months or above will take it. But if you can substantiate even 9 months and above also, generally, which will take it in the practice. Yeah, it depends, obviously, depends on the each circumstance and situations, and professional judgment is involved in this decision, right? And see, car acquisition cannot be a qualifying asset. A 5G license which is acquired and which you are supposed to develop it, which will take 3 years of time, yes, it is obviously a qualifying asset, right? A purchasing of a machine or equipment, generally no, right? A land acquisition also no, it is not a qualifying asset. Yeah, some important point which is asked in the previous examination also. Suppose parent has taken a loan and that loan has been given forwarded to the subsidiary for a qualifying asset. Yeah, see, in the subsidiary will be accounting as per Ind AS 23, but we are looking at from the consolidated financial statements point of view. Yeah, now the question is, a subsidiary must have capitalized it. I mean, to the extent at what rate of borrowing cost it is incurring. But actually, this loan has been loan is taken from whom? From the holding company. So the holding company has taken, for the holding company, is it a general borrowing or is it a specific borrowing? Yeah, see, parent must have taken it at the rate of 10% and it has given to subsidiary maybe at 5%. So subsidiary must have capitalized only 5%, but not at 10%. Yes, but in the consolidated financial statements, your capitalization is supposed to be at 10%, but not at 5%, in simple example. Okay, but if the group, that is the holding company group here, basically group you are supposed to look at. Yeah, if the group has taken it a general borrowing, right, then you are supposed to apply weighted average borrowing rate of the group, all the loans, not necessarily the holding company, all the loans general borrowing rates only you are supposed to consider. At that rate only it is supposed to be capitalized, not at the rate holding or any group member has given to our company. Just remember, you are trying to do it at the consolidated financial statements, right? Next, prepayment. Yeah, if you have paid any charges for prepayment of a debt, no, that is not treated as a borrowing cost. Yeah, if it is right, any derivative instrument, suppose you have taken interest rate swap, okay, something like that. If there is any loss because of the interest rate swap, how to account it? Yeah, actually there is no guidance on this. There are two views. I mean, if the company treats it as, see, I have taken interest rate swap which is not directly attributable to this loan or some other qualifying asset, then they will be accounting that swap as obviously FATPL, and the swap gain or loss obviously will be transferred to profit and loss, right? Or if the management establish a relationship between this borrowing for the qualifying asset and with respect to this derivative, then yes, that loss also will be capitalized like a borrowing cost, right? And from which period to which period this borrowing cost are supposed to be capitalized? Yeah, there is a starting point, there is a suspension, there is a cessation, there is a stop point. When do you start the capitalization? There are three conditions to satisfy. If you satisfy three conditions, then yes, start capitalization. One, costs on the qualifying asset are being incurred, borrowing costs are being incurred, and activities are in progress. That activities may be physical activities, it can be physical activity, it can be administrative activity or technical activity, but which are very much necessary for the qualifying asset to make it ready for its intended purpose. When you satisfy all the three conditions, from that day onwards, the borrowing cost will be capitalized. Any borrowing cost incurred till that date will be charged to profit and loss. Yeah, with respect to suspension, when do you suspend it? When there is no active development, I mean, there is no movement because of the lockdown, because of the, I mean, labor strike, because of the lack of material, because of the, natural problems. I mean, whatever the reason, if there is no active development, then the borrowing cost should not be capitalized. If not capitalized means it should be charged to profit and loss during that suspension period, right? Under these two circumstances, even though there is no active development in the qualifying asset, still it will be capitalized. One, if there is a temporary delay, but that is which is necessary for the qualifying asset, like because of the curing purpose we stopped activity, then still you're supposed to continue. Or there are some background, in background there are some technical or administrative activities which are very important, which is going on because of which they have stopped it. At that time also, do not suspend the borrowing cost capitalization, continue the capitalization. Last stop. Once, right, when do you cessate it or when do you stop it? Once substantially all the necessary activities to make it ready for my intended purpose. End of the day, whether the qualifying asset is ready for its intended purpose, substantially is it ready, can I start using it? Yes, if you say, then stop it. When you stop it, from that day onwards, the borrowing cost incurred should be charged to profit and loss. Borrowing cost incurred should be charged to profit and loss. Okay, if it is completed in parts, yeah, one building next to one building next to one building, something like that. One building, if it is ready for its use, then yes, you should stop capitalization. Next question is with respect to how much to capitalize. It is depending upon the type of borrowing. Is it a specific borrowing or is it a general borrowing? If it is a specific borrowing, that is which is specifically borrowed for the purpose of the qualifying asset, general, what is the borrowing cost minus if there is any income on the temporary fixed deposits made out of the loan, that reduce it, the remaining amount is supposed to be capitalized. If it is from the general borrowing, then we have to calculate one capitalization rate. That capitalization rate is nothing but weighted average borrowing rate. How do you calculate? Just average borrowing cost incurred divided by adjusted outstanding borrowing. What is adjusted outstanding borrowing? Loan amount into number of months. I mean, you have borrowed it in the current year divided by 12. Like that, you will be able to do it. Yeah. Yes, and you should capitalize the borrowing cost. I mean, you should not capitalize it. I mean, when you capitalize it, the qualifying asset value should not be crossing the recoverable amount. It should not cross recoverable amount. Then fine. I mean, after capitalization, if it is crossing recoverable amount under 36, under Ind AS 36, under impairment loss, obviously will be applying the impairment loss standard. That's the reason, right? Maximum limit that should not cross the that should not cross the recoverable amount. Yeah, this is the last point of the standard, that is foreign exchange loss on the foreign currency borrowing to the extent it is regarded as borrowing cost. Right. Situation number 1. See, we have to assume that we have taken Indian borrowing. Correct. If you have taken an Indian borrowing, and what would have been my borrowing cost if I had taken the Indian borrowing? Take it as a what is that, benchmark. Accordingly, you should write. See, exactly your borrowing cost and foreign exchange loss has come to say 80,000. Right, and Indian borrowing cost, if I had taken, it's not taken, it is 90,000 rupees. Then, right, if it is 90,000 rupees, then entire 80,000 will be capitalized. Suppose Indian borrowing cost is 90,000, but actually incurred borrowing cost is equal to 1 lakh, including the foreign exchange loss. I repeat once again, Indian borrowing cost is equal to 1 lakh, assuming, okay, and actual borrowing cost which we have incurred, including the foreign exchange loss, is equal to 1 lakh. Then out of 1 lakh, to the extent of 90,000 supposed to be capitalized, remaining 10,000 will be treated as a foreign exchange loss, will be dealt by Ind AS 21. Done. Next, first year we got foreign exchange loss. That's why you capitalized with some 20,000 rupees, you capitalized with the asset. And next year you got a foreign exchange gain, you got it, then you are supposed to reverse it. Yeah, but first year only you have got it foreign exchange gain. First year only you got foreign exchange gain. Foreign exchange gain is not a foreign exchange, it's not a borrowing cost, because cost is something which you lost it. Here it's a gain, you have not lost anything. That's why there is nothing which can be capitalized. Right, my dear? That's it. This is about the standard. And if you like the video, if you feel that this will be helpful to your friends, please share it and comment and like as usual. Thank you and wish you the very best.